Welcome to the Great Canadian Piggy Bank, helping Canadian parents raise money-smart kids. This episode is all about helping your teen build credit. Today's teens are stepping into a world where credit cards, mobile plans, and even buy now, pay later options can shape their financial future before they've finished high school. To help us make sense of it all, I'm joined by Barry Choi, who's the founder of Money We Have. His work appears regularly in the Globe and Mail, CTV, and Global News. Welcome to the show, Barry.
Thanks for having me.
Can you share a little bit about what you do and why you focus so much on helping Canadians understand credit and credit cards?
Two main channels where you can find me. First is the Globe and Mail. I write a regular column about once a month about loyalty points and credit cards. This is a nice little channel in the sense that it's really about credit card news and how things that are happening in the business really affect consumers. So that could be, say, grocery loyalty points to lounge access that has been added to credit cards. And on my personal channel on Instagram, Barry_Choi, I talk more about credit card hacks and tips and some quick, 40 to 60 second sound bites that are really easy to digest. I like to travel on points quite a bit, so I talk about that quite a bit, but generally speaking, I cover all things credit on both.
Okay, so then let's start with some of the basics. What is credit and how can we explain it in simple terms to a teenager?
Yeah, credit is essentially a loan from your parents or in this case, a bank. And there's no cost to you for roughly 21 days. But, once those 21 days are up, your bill's going to come and you have to pay it back in full. Otherwise, you're going to have high interest charges. And credit cards have some of the highest interest charges out there. Is high interest debt. Credit cards are a very useful tool when used responsibly. But if not used responsibly, you can end up in a huge debt trap, which obviously you want to avoid.
So how is building credit today different from when we were teens?
Oh, it's similar but different. I do think there's more education. People are constantly talking about credit scores. But the obvious thing now is there's just way more credit cards available. When I started writing about credit cards, each bank probably only had 3 or 4 credit cards.
Yeah.
This was about a decade ago. But now at a minimum, there's probably a dozen minimum each bank has. There's so many different ones available. But also what we're seeing, buy now, pay later.
Yep.
Equifax has announced that they're going to start reporting credit, or at least some of them will, not necessarily all of them. Now, if you have got a cell phone in your own name, you can also build credit that way. So there's credit for everything these days, which can be good, but often it can be very bad.
Yeah, absolutely. So what are the safest ways for parents to help a teen build credit then?
There's a few different ways. The natural thing to do is to give their kids a supplementary credit card first, which is very smart because then the parents can monitor the kids spending. But what happens is they'll give them a cap, the kids spend it, and then the parents pay off the bill. So while that is good because you're watching their credit limits, you're not really educating the kids about how to use credit responsibly. That is still a good start, especially when your kids are an early teenager. They just get familiar with it. It's more for emergencies. But once they get to their older teens, you probably want to sign them up for a credit card under their own name so they can start building a credit. But at the same time, hopefully over the years, you've educated them. It's not uncommon for a young adult to get their first credit card statement and read it. It says, oh, minimum payment $10. They're going to pay only $10 because they don't realize that there's interest fees that come with it. And that's why it's so important to focus on financial education more than anything else.
Okay, so what I'm hearing then is you start the kids off with a supplementary credit card. So that's like an extra card under your account. Is that what you're saying?
That's correct. So supplementary credit card, but also there are some new apps these days. For example, RBC has this thing called MyDo. It's more like a debit card, but it essentially allows you to assign your kids tasks. They can earn money within the app itself. There are educational tools where they can learn about delayed gratification and savings goals. And then it just opens up that conversation. But at the same time, it gives those kids the independence that they want and crave, but parents still get some oversight. And I do feel these days there needs to be a healthy balance. And I think a lot of parents realize that, especially if you've grown up in North America.
What ages then do you think would be good? When should they get a supplementary card versus their own card?
I would say in high school, that's where you want to get a supplementary card. Again, it's more for emergencies for anything else, right?
Yeah.
Just so they have access to it. And I would say for teenagers or kids to get their own credit card, as soon as they're the legal age, so that's 18 or 19, depending on which province or territory you live in, just to start building that credit. The easiest way is to just get it with your home bank, get a no-fee credit card that's aimed towards students, and ask for a low limit, because that way you can control what you're spending to a certain extent.
Yeah, absolutely. You're talking about buy now, pay later. So the
Yeah.
BNPL options that are happening, like Klarna and Afterpay. And a lot of the teens are starting to use it before they even have a credit card.
Yeah.
And then I was shocked the other day to hear that Equifax is now using it to, as you mentioned, to build part of their credit score, which is frightening because by the time they are 18, this might already be impacting their credit score, right?
Yeah, so this is really interesting because I feel like it kind of came up a couple years ago, and anyone who's in finance, like, this is awful. It's just going to encourage people who can't afford it or kids to spend more.
Yeah.
But the reality is that it's not going away. Every single bank has adopted it. I think we've got to reframe things. And what I mean by that is it is just another credit tool out there, right? So when you think about it, okay, if you're using it and paying everything on time and in full, there's no fees, right?
Absolutely.
No interest charges. It's no different from a credit card. But what's interesting about the buy now, pay later is because you can make it in 4 payments, it can actually help you manage your money to a certain extent. So I can see why it can be a useful tool in certain situations, especially for younger families. Sometimes you naturally just have a cash crunch, or maybe someone is currently laid off, but they've just got a new job and they know they're going to get their first paycheck, but they just need a little bit of wiggle room. It does give you some breathing room as opposed to like a loan at the bank, which would charge you interest right away. So again, it is just another credit tool out there. And it just ties back to what we were saying earlier, how as long as you're educating your kids about how they work and they understand, then it can make sense. And like you said, the kids are going to potentially already have a credit score established before they even become a young adult.
With teens, they could do buy now, pay later, but it's like $10 a month. And then they do another one. And then it's $20 a month. And then they do another one. And they all seem like they're $10, $50 a month. It seems really manageable. And suddenly they've got 10 of them and they're now paying $500 a month. Like, what advice do you give to parents to talk to the kids about this? Because this is speed up.
This is no different from any subscriptions. And when we talk about subscriptions, we think of the usual stuff. Disney Plus and Netflix. And this is really one of those things where it comes down to financial education. And maybe it's a matter of setting reminders for yourself, right? But if you can teach your kids what delayed gratification is at an early age, maybe they won't be as tempted with that buy now, pay later. But it is an interesting new tool. And it was something that before I was very against. But I've accepted that it is part of the daily life for many people these days, and many merchants use it. How do we use it responsibly? How do we educate our kids about it?
What happens if they default and don't pay?
It will go to collections, and then that will ruin your credit. You got to make sure your kids are paying it off, and not just kids, adults, anyone who uses it.
Yeah.
Don't be adding $10 a month every single time, because it just adds up. And people also have credit cards or lines of credits, other types of debt. It all adds up.
Oh my gosh. Like just the consolidation of it all is just okay. So then what are the most common credit mistakes you see young adults make when they first get a credit card?
Oh, the biggest one is people not paying their bills in full and on time. But another mistake I would say is consumers are not choosing the right credit card that makes sense for them. Quite often we stick with the bank that our parents had, right? So if your parents bank with RBC or TD, you will most likely have an account with them and you'll get a credit card with them. Now there's nothing wrong with that, right? Yeah. But you got to think big picture and be like, does this credit card make sense for you in terms of the rewards you want, whether that be cash back or travel, or does it make sense to pay an annual fee when you don't need to? So I think that's a pretty big mistake. They just don't have the right credit cards. And another thing is people focus way too much on credit scores. This is just something that has happened in the last 10 years. Oh, I don't want to cancel a credit card. It's going to affect my credit score, or apply for a new credit card. Here's the thing. Anything above 650 is good. Credit score is a number between 300 and 900. The reality is the difference between, say, an 890 and a 720 is 99% average versus a 95% average. Right. They're both getting excellent marks, Quite often we hear, if you have a good credit score, you're going to get a lower interest rate. You're not going to get 1% interest rate just because you have a high credit score. Yeah, but
Yeah.
realistically speaking, anyone who even has a good credit score in the 650 range is probably going to get a similar interest rate to someone who's close to 900. We obsess over it way too much.
But what about renting apartments? Because they'll check credit scores.
So that's probably the
Yeah.
one situation where it might make a huge difference. Say they've got a 750 credit score and someone's got an 850. One landlord might choose the one with the higher credit score if everything else is equal. Yeah, the credit score is just one small part of the overall picture. What's the income that this family is bringing? Do they have history? It's no different from getting a loan. Your credit score is just a small part of the overall picture.
That's fair. Okay, so then what's your advice on parents co-signing for a first credit card or loan? When does it make sense and when is it too risky?
Listen, I get it. Parents want to care for their kids. They
Yeah.
want to give them every possible opportunity. And every parent thinks that their kid is the best and they would never do anything wrong. But so if you want to co-sign, just be well aware that you are 100% on the hook if your child does not pay. Maybe it makes more sense to give your kid some money for a down payment, which we're seeing all the time.
Yeah.
But there's got to be some rules in place, because if the parents are constantly bailing out their kids, they're not learning anything.
So then I feel like I already know the answer to this next question. How do you handle if your teen slips up and they miss a payment or they overspend?
Well, in this case, you do want to bail the kids out.
You do?
Yeah,
Okay.
there's a teen and they missed out one, but it is a learning process, right? Because they will instantly be hit with interest charges. So you can educate the kids. Let's assume it was an honest mistake and they just forgot. I don't think teens aren't intentionally not paying their bill. So you can tell your kids, hey, okay, this happened, but these are some ways you can avoid it. You can set a reminder to pay your bill every single month in your calendar. You can set up automatic payments. So even if you don't have the full amount, you can teach them, hey, set the bare minimum. So at least it's getting paid. And now again, if it's one of those honest mistakes, you tell your kid, like, hey, listen, call your bank and tell them, explain that it was an honest mistake. I've paid the balance immediately already in the account. Can you waive the interest charges? Because it just shows them that they're being responsible for the decisions and mistakes.
Excellent. That's a good idea. Thank you so much for joining us today, Barry. This was an awesome conversation, and I know a lot of parents are going to really enjoy listening.
No problem. Thanks for having me.
My one major takeaway is that the landscape has changed. Between buy now, pay later options and cell phone plans, our teens are building a financial reputation earlier than ever. Barry's strategy is to start small with a supplementary card in the early years for oversight, but then encourage them to get their own card that makes sense for their lifestyle once they hit legal age to truly build their own history. I also learned today that you don't need a perfect 900 credit score. Focusing on good habits like setting auto payments and understanding delayed gratification is far more valuable than chasing a number. When we treat credit as a practical life skill, we give our kids a much better chance of becoming a confident, responsible adult with money. If you found this episode helpful, please share it with another parent, follow the show, or leave a quick review. It really helps more families find these amazing conversations. I'm Christi Rae, and this is the Great Canadian Piggy Bank, helping Canadian parents raise money-smart kids.